Welcome to Trade Pro. In this video, I want to talk about the only way that you should be trading with trend lines if you want to be consistently profitable, and why the normal way of using trend lines is so inferior and likely going to get your account destroyed. So let's start out with the normal way of thinking about trend lines, the normal mindset with trend line trading. And that is that people are waiting for a breakdown of the trend line. So maybe they wait till a candle closes below and then they're looking for a trend reversal, so they'll short right up here. Or maybe they wait until a retest of the trend line to go short after there's a bearish candlestick pattern. Here's why that is terrible. Now, there's multiple reasons, and I'm going to go over 3 or 4 of them. Number 1, professional traders know that most breakouts are false breakouts. Number 2, you're going counter trend. You instantly put the odds against you when you trade counter trend. And another thing is, trend lines are extremely subjective. So how do you know that your trend line that you have on your chart holds any weight in reality? And number 4, a lot of the time when your quote unquote trend line breaks, price just goes sideways and then continues a massive uptrend right afterwards. So 4 pretty good reasons why you should probably not be trading a reversal on a break of a trend line. Now let's talk about how you actually should be trading trend lines, and also just the general mindset about trend lines. So here's the general way that I want you to think about a trend line, and that is as an area of value. Think about it as when the price has now pulled back to the trend line that you have, you're likely at an area of value, so you can start looking for a buy signal, okay? So even on a breakdown of your trend line, you should still be looking for a buy signal because price is likely in an area of value at that point. You wait until you have a clear trend direction, so you can use a 200 EMA, you can just wait for higher lows and higher highs, wait till you have a nice trend line developed. But anyway, you want to be looking for an area of value to look for your buy setup. So that's the main way I want you to think about it. So let's go into more of an example of how you could utilize a trend line to actually get an entry. I'm just going to put a stochastic up on the screen here. So let's just say that on this trend line, you're waiting for a tap on the trend line. Let's say here or here. You can wait until it comes down to your trend line, also known as the area of value, and then wait for an entry for the cross up on the stochastic, for example. So if you did that along the way, you're going to actually come out with a lot better results because you're going with the trend. If you're taking crosses up on the stochastic at areas of value and placing your stop below the nearest, whether it be swing low or below the trend line after a cross up on the stochastic, you can gain a whole lot more on your account because you're actually going with the main trend and trading the way that professionals trade, with the trend, waiting for areas of value, being patient, not trying to pick tops. Okay? So just keep in mind that when your trend line breaks, it doesn't mean that you should be looking to short the market. It means that you should be looking for a buy signal, as price is probably in a good area of value, and probably a lot of people are about to get trapped and stopped out. So guys, remember, think of your trend line as an area of value, not as a place to get a potential reversal or pick a top. All right? So if you guys like these types of videos, make sure to like the video and comment down below for the YouTube algorithm. If you haven't subscribed, make sure that you subscribe to the video. Appreciate you guys all. Thank you so much for watching. One last thing I want to say is that in general, I don't like trend lines all that much just because of how subjective they are, but when you think about them the right way as the area of value and you aren't using it as this definitive level that once it's broken you can go short, then you can actually do something with a trend line, okay? So stop thinking about it the wrong way and maybe you'll start making some money in the markets. Combine that with some other factors and you've got yourself a decent strategy. Anyway, thank you guys again. Have a nice day.